What up, Frugal Babes, Frugal Bobs? It's your girl, Helen Kerins, Frugal Mom herself. Tonight, we talk investments. Okay, guys, so before I even get into this vlog, I just want to let you know something. If you hear or see anything on this video that sparks your interest, please know that I do not know what I'm talking about, okay? I am not a financial professional. I am just sharing my experience with investing, okay? So please, if you are interested in investing, do your due diligence, to do your own research, to reach out to a financial professional, and to make the right decision for yourself based off of your research. All right, guys. So investing. I have been wanting to share this vlog for a while now, but I wanted to wait until like almost the 12-month, 1-year anniversary mark of when I started. So story time. Here we go. I started my career a little late. I graduated from college in 2001 with my bachelor's degree in music, and then I just went straight into my master's in 2001, graduated in 2004 with my master's. I do not recommend that you do that, and that'll probably be another vlog, but yeah, I don't recommend that you go right into your graduate degree right after your undergrad for a variety of reasons, but another vlog. So I was in school just back to back, and accruing a lot of debt and whatnot, and then traveling and singing and recording and blah, 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 blah. And so I started my career in 2010. My mom was always like, hey, you know what? The financial advisors are going to be at work today. You should totally go talk to them to find out how you can start saving money. And I was like, nah, I'm young. I don't have to do that. Mind you, I was already, gosh, I don't even know how old I was in 2010, but I was probably embarking on late 20s, early 30s. I don't even remember. But she kept nudging me to do it. And I was like, whatever. Well, one day I was talking to another colleague that was also a friend of my mom and I, because if you didn't know, my mom was a teacher and we both worked at the same school for a few years. So he was like, oh, you know what? Financial advisor's gonna be here today. You should really talk to him because, you know, you're young, and if you start investing now, you're gonna have a nice little nest egg. And I listened to him more than I listened to my mom. Ain't that how it be, y'all? So I finally made an appointment to speak to the financial advisor from Lincoln Investments. So I didn't know what I was doing. I was like, whatever, just do what you gotta do. And he was like, we'll do these mutual funds and blah, blah, blah. And are you going to be aggressive? Are you going to be more conservative? And at that point in my life, I was like, I don't know what the hell you're talking about. Just whatever. So I was putting away like $300 a month. No, like $600 a month, like $300 out of every paycheck. And then I changed it to like $150 a paycheck, aka $300 a month and whatever. And then time rolls on. I get married. I have a kid. And now I'm starting to become more interested in retirement because I'm like, wait a minute, now I have a family. So I called my financial advisor and was like, hey, I want to really understand what it is that I'm doing in this 403B of mine. So he was like, sure. So we made an appointment and he explained things to me. And again, I was still not 100% understanding the whole process, but I was like, just whatever. He showed me this chart where it was like, well, if you save this much every month, by the time you reach this year, you will have this much. So that's what was guiding my decisions. Okay. So now my husband graduates college and he gets into the finance career, and he's like, why do you hire Joe to do your finances? You're married to a financial advisor. But mind you, I had Joe as a financial advisor for quite some time now, okay? I would say maybe like at this point, 4 years, maybe 4 or 5 years. My husband had just started his finance career, and I'm like, I love you, babe, but I don't know if I fully trust you with my retirement. Not right now. Just keeping it real, y'all, okay? So he kept nudging me and nudging me and nudging me. He was like, let me just see your portfolio. So I showed it to him, showed him a statement, and he was like, okay. And he was like, give me the ticker symbols. Gave him the ticker symbols, and he was doing all the math without me showing him too much of the portfolio. And he was like, okay, this is what you are. You're like moderately aggressive. I don't know, something like that. He figured everything out. You're like 50%. You've got mutual this and mutual and bonds this and blah, blah. Again, I'm still not understanding what these things mean. But from what my husband did on his little scratch pad, and then I emailed my financial advisor and was like, hey, can you tell me a little bit more of like what I am in terms of, my mutual funds? Am I aggressive? Am I this? And he wrote back to me, and what he wrote back matched what my husband did on his scratch pad. So I was like, I guess my husband does know what he's doing. So fast forward a little bit more, and we're getting ready to buy the house last year. And again, we were in the middle of the pandemic, right? When we were house hunting. And my husband did something, and he was like, hey, I didn't tell you, but I'll tell you now. When the market crashed in March of when the pandemic started, the market was like down. He was like, I'm gonna buy. And he bought a lot of stock. And a few months after, when we were starting to house hunt, he was like, by the way, I did X, Y, and Z in March at the start of the pandemic, and look at my portfolio. And I was just like, what the heck? He had invested when the market was super low, and he had some crazy gains just a few months afterwards. And I was like, I want to do this. I want to invest in the stock market. Like, what are we going to do? So now that we're house hunting, again, I am just telling you, this is like story time. I'm just telling you what I've done. I'm not a professional, and there may be terms that I may not be 100% sure on. So again, do your research. But apparently, if you're going to be a first-time homeowner, like buying a house for the first time, you can take a $10,000 distribution off of, for me, my 403b, my husband 401k. You can take a $10,000 distribution. They don't like tax you on it. You don't get no penalties for the first-time purchase of a home. So I trusted my husband, and I was like, okay, let's just do it. So I had money from my previous employer that Joe was still managing. And then I had a new employer because I had started a new job with a new school district. I started a new 403b, and I forgot, oh, wait a minute, I still have my money from this other 403b from my previous employer. So my husband walked me through the process. We filled out the paperwork, and we took that money out and we put it into an IRA. So we kind of we took away some of Joe's, money. I mean, I don't know. I guess he's making a fee off of me, like having those accounts. But my husband was like, just trust me. I was like, okay. So we took $18,000 that I had from my previous employer, and we moved it to an IRA, okay, with Bank of America, Merrill Lynch, whatever. So then we took the $10,000 out for the house, and we left it in the account, and now I had $8,000 left. So my husband was like, do you trust me now? And I was like, yes, I do. So I trusted my husband, and I gave him the $8,000. He created a little plan for me. He said, what companies do you like? What do you like? And I'm like, oh, like McDonald's. Just being honest. I like Google. I like Amazon. And I was telling him, so he was like, okay, this is the first thing you're going to do. He says, you're going to look for companies that are strong companies that have been around for a while, that even though we're in the midst of a pandemic, you can kind of see that they're going to survive the pandemic, thrive in the pandemic, and grow from the pandemic. So Amazon was the first choice. It was the first choice for a few reasons. I felt that because we were in the pandemic, okay, we were in quarantine, people were going to be shopping online, right? So I was like, Amazon. Amazon's always been a really like strong company, and now it's really going to get even stronger. And another reason why I wanted Amazon and that was my first choice is because Amazon stock is expensive as hell, y'all. Okay, it's like $3,000 for one share. Okay, so if I had $8,000 to spend, then I had to make sure that whatever was the most expensive, I got that out of the way. About $3,000 there. Then Apple. I use Apple products, and we bought 4 shares of Apple. However, after I bought my 4 shares of Apple, a few months later, there was something that Apple did where like they split the shares. And again, I don't 100% understand how that works, but they split the shares and now I have 16 shares. Okay. Then we got McDonald's. Even though, y'all, I am on a health journey and I have lost 35 pounds and I'm going to continue losing more weight because I have a goal of 60 pounds to lose. I've always liked McDonald's, and even though I am not really eating it anymore, a lot of people still do eat it and I want to make money off of that. So we bought some shares of McDonald's, and then my husband was like, I'm going to pick VTI for you. And I'm like, I don't know what VTI is. VTI is like a basket of a bunch of stock, a bunch of different ones. So here's some examples of some of the stock that is in VTI. Vanguard Total Stock Market. Oh, and before I forget, with McDonald's, I got 9 shares of McDonald's because I could afford the shares. I believe when I purchased it, and I'm just looking at my computer right now, when I purchased McDonald's, each share was $193. So I purchased 9 shares. With Apple, like I said, I had purchased 4 shares because when I originally bought it, it was $97 a share. And then they did the split, I got 16. Amazon, like I said, 1 share. That's all I could afford. That share cost me $2,943.33, and it has actually gone up. And now Vanguard was $162.90 a share, and I got 12 shares of VTI. So in VTI, just to give you an example, VTI has a variety of companies in it. Some of the companies that are in this VTI basket that I have a little bit of Facebook. I have a little bit more of Amazon. I have a little bit of Apple, a little bit of Microsoft, a little bit of Tesla, a little bit of Chase, a little bit of Johnson & Johnson. There's a bunch of like really strong companies that are in this, little bundle of mine, and a little bit of Google. So I have that. And now my husband did everything. It was about $8,000. He made me look it over. Okay, are you in agreement with everything that you see? And I'm like, I guess. I don't know what I'm doing. And we bought it. And so I have been looking at my account, not regularly, because one thing that I am learning on this stock market investment journey that I'm on is that the stock market has a trend, y'all. It goes up, it goes down. It goes up, it goes down. It goes down. It goes up, it goes down. It goes up, it goes down. Just to give you an example, this morning before I was getting ready to film this vlog, I looked, and I'll show you a snapshot, and my account was at $11,000. I was like, what? Word? And then now that I'm recording, which has been like maybe an hour later from when I originally checked, it is down. It is at 10,000 and change, and I'll show you a snapshot of that. So, what is the moral of the story today? If I had to give you any tips, it would be start young. Start young. Even though I don't know 100% what I'm doing with this, I'm trusting my husband, and I still do have Joe as a financial advisor because he manages my 403B at the school district that I'm at. But if you can start investing younger, do it. If you are like me, that you waited a little bit later in life to do it, to start investing, don't worry. Who cares? Who cares that you're older? Just, you know, get yourself the information that you need. Find yourself a professional that can guide you through the process if you're not good at learning it on your own. And don't be afraid, right? Some things that I would encourage you to do. Don't look at your account. If you've started investing like me, do not look at that account every day, y'all, because it will go up and it will go down and it will go up and it will go down. And a lot of people get nervous when it goes down and they want to pull, their funds. But the stock market, really, you have to leave your investments where they are. And over the course of years, it will grow, right? Like I mentioned at the beginning of this video, or in the middle of this video, I gave my husband $8,000, okay, of my money. And he was like, I'm gonna make your money grow faster than Joe. And I thought it was hilarious that he said that, but it is growing faster. It's growing faster because I've taken out the middleman, right? So there are certain fees that I'm not having to pay Joe on this money. It's just purely in the stock market. And because I am 43 right now, and my husband's like, you still got like 20 some odd years left in you to work, like, be a little bit more aggressive, right? You become more conservative as you get older and you're ready to pull your money out for retirement. So I was like, okay, I guess. So when it comes to the stock market, I guess my husband has placed me in a position of being just a little bit more aggressive, okay? With my 403b, I am a bit more like moderate, conservative. So I think that I'm gonna be reaching out to Joe and be like, okay, we gotta figure something out. Get me to be a little bit more aggressive in these mutual funds that I have. And then maybe in like 10, 15 years, I'll become more moderate. And then as I am approaching retirement, I will become like conservative, okay? But long story short, I'm excited about this journey. Again, started with $8,000 in the stock market. It is at a high 10,000, so I have earned about $2,000, just my money just sitting there, right, just growing. So again, do your own research and get yourself a professional to help guide you through the process. And I will be keeping you guys posted on this journey, so keep watching every Wednesday night the Frugal Mom series to see how I am doing with my investments. Love you guys. If you watched this far, y'all smash the like button, subscribe, do all those YouTube things that we like you to do, and I'll see you next time.